สวัสดีครับวันนี้เราก็มาพบกันอีกครั้งนะครับกับรายการ Corporate Day นะครับที่เราจะเชิญบริษัทจดทะเบียนเนี่ยมาพูดคุยกันเกี่ยวกับลักษณะในการดำเนินธุรกิจแล้วก็แนวโน้มการทำธุรกิจของเขานะครับวันนี้เนี่ยเราก็ได้รับโอกาสนะครับจากทางบริษัท TPAC นะครับซึ่งเป็นบริษัทที่เราเพิ่ง initiate ไปเมื่อวันศุกร์ที่ผ่านมานี่เองแล้วก็หุ้นก็ถือว่าขึ้นมาได้ค่อนข้างดีนะครับวันนี้เราก็ได้รับเกียรติจากทางคุณเควินแล้วก็คุณวิชาลนะครับผู้บริหารทั้ง CEO แล้วก็ CFO ของบริษัท TPAC นะครับรวมถึงคุณสรุตที่เป็น IR ด้วยนะครับสวัสดีครับสำหรับเซสชันในวันนี้นะครับเราก็จะเริ่มมาจากการที่ทางบริษัท TPAC เนี่ยจะพรีเซนต์เกี่ยวกับตัวของธุรกิจแล้วก็แนวโน้มก่อนนะครับแล้วหลังจากนั้นเนี่ยเราก็จะมาเข้าสู่ช่วงของ Q&A กันซึ่งผู้ชมทางบ้านเนี่ยก็สามารถส่งคำถามเข้ามาได้นะครับแล้วเดี๋ยวผมจะเป็นคนที่คอยอ่านให้นะครับแต่เซสชันวันนี้ก็อาจจะพิเศษนิดนึงเพราะว่าเป็นภาษาอังกฤษนะครับแล้วก็จะมีทางคุณสรุตเนี่ยช่วยแปลเรื่องของ Q&A ให้นะครับเดี๋ยวขอรบกวนเชิญทาง TPACพรีเซนต์ได้เลยครับผมขอโทษนะครับพอดีทางคุณสรุตไม่ดังครับ
ครับสวัสดีครับคุณวิชาลplease start the presentation for our business ครับ
Sawadee krab. Good afternoon, everyone. Thank you so much for joining us today. And thanks so much to Yuanta Securities for hosting us today on their Yuanta Corporate Day. I'm joined with our Group CEO, Mr. Kevin Kumar Sharma, and myself, Vishal Agarwal, who is the Group CFO for Thai Plaspac. Also with me are Khun Sarut and Khun Ravi, who are part of the Investor Relation and Corporate Finance team. Thank you once again for having us here. I would, in the next 25 minutes, take you through a brief presentation of us and how our journey evolved over the last few years and what we look forward to for the next decade in terms of the world of opportunities that TPAC sees. And then we can open the floor for the next 15-20 minutes for any questions that you may have for us. Thank you once again. Kunzar, go down, please. So welcome all once again. I take the pleasure to introduce you to TPAC, a specialty packaging solution provider. We claim with a lot of humility and pride that we are Asia's fastest growing packaging company. And we say that with a lot of credibility built on how we have seen other companies in the same sphere growing in the last 5 to 6 years. The reason we are the fastest growing packaging companies is built on certain solid foundational pillars that we have developed over the last few years. To give you a sneak view of that, first and foremost, the speciality that we bring to the table is the fact that we are more than 90% focused into food and pharma, which requires a high degree of hygiene DNA at our manufacturing shop floor, and also brings with it a very strong sense of customer stickiness with a cash flow resiliency. So this is one area where we have kept ourselves focused as we embarked on having the TPAC 2.0 ever since the new shareholders took control. The other aspect for us is the focus that we have kept on our markets. So we are 100% focused on emerging geographies. Today, we have presence in 5 such emerging geographies, which we'll speak more about. All our products that come out of TPAC shelf are built on a very solid design lab foundation that we have created. Any such sale that happens is preceded by months of engagement with our customer on the right level of design functionality that is done through our design lab. We also pride in having a set of customer base, which has been spanning over multi-decades, the relationship which has been going stronger and stronger over the years. But most importantly, it's a number which is constantly increasing to the extent that today we have around 1,500 customers spread over 50 countries that we are serving out of our 5 locations. And last but not the least, whatever we do, sustainability is at the core of our product offering, and that comes through the choices we have taken very early on, which I'll speak more about as we go further. Go down, please. I think it's important and worthwhile for some of you guys who may not know us to go back a bit in history. So you can look at TPAC as a young organization, where in 2016, the new shareholders came into being and installed a new leadership and a management, which has been at the forefront of driving radical transformation of the company. Definitely, they built upon the foundation laid by the erstwhile founders, who almost came with 30 years of laying the foundation and bringing their experience of making a packaging company in Thailand. But as you will see going forward, in the last 6-7 years, it's been a journey of growth. It's been a journey of internationalization, which has completely reshaped the picture of TPAC of what it was when the new shareholders came in 2016. Go down. I think the important part around how this happened goes back to the early days when the shareholders came in 2016. The management spent almost 2 years in coming up with very, very carefully crafted strategic choices, which defines who we are today, and which also is a culmination of us being the fastest growing packaging company, a title which we have been carrying for the last few years, and something which we also intend to claim in the next coming decade also. So what were those choices? I guess the first choice goes back to who we are and what we will be. I think the choice was taken that whatever we do, we'll keep ourselves in the bucket of being the most sustainable packaging company. So a choice was taken to only deal with 100% monomaterial formats of polymer with proven mechanical recyclability. We also took a choice that we will be very careful on where we go next from Thailand. So it was ideated and it was decided that our focus for the next decade will be emerging geographies, which are growing at a much faster pace than the world's average. And the growth of the geography, the GDP of that country, is sort of proxy to our business growth. The third choice was taken that organic growth would not be enough to meet our growth aspirations. So we need to build a very, very strong M&A muscle, M&A engine within the company. And that's where we took M&A as a very serious route to grow our expansion outside Thailand. And that you will see in the next few slides how this engine got developed, and we have had seamless execution of M&As over the last 5 years. The other two choices were around the fact that we will be very focused on segments which has high entry barriers, which require a certain kind of a DNA, and that's why we have only grown and strengthened ourselves into food and pharma segment. As we speak today, yes, we do keep on looking at other areas which has similar such traits and requirements, but we are not going to be a run-of-the-mill plastic producer as a business. And finally, we also made sure that while we have the best names on our customer profile, we have the best logos, but we will not get ourselves overly hedged by one or two customers having high concentration onto our balance sheet. So while we retained our clientele and have some of the MNCs on our list for the last 40 years, but at the same time, we have been very, very consciously growing our customer to ensure that more than top 10 customers do not account for 30% of our revenues. And finally, we wanted to build upon the foundation of Thailand business, which we have further solidified and transformed from what we acquired in 2015. Go forward, please. I think this slide will just give you a picture of the first 2 years that I spoke about ideation, strategizing, and then a very seamless execution engine in place from 2018 till 2023, where we not only did 5 acquisitions, but also grew the platform that we acquire organically by investing into infrastructure, investing into machines, and most importantly, investing into people and processes. Go down. This is a slide which is self-explanatory. It kind of just gives you a mental map of what the world was before we came in and what the world is. So that exemplifies what TPAC 2.0 is from 2016 onwards. As you can see, when we came in, it was a company limited to Thailand, exporting to 8 countries. Today, we are present in 5 geographies and serving 50 countries. 3 plants became 17. New technologies got added. Our revenue almost quadrupled. We are now listed on the main exchange, and last but not the least, a very high emphasis also coming in on the corporate governance rating, which improved from 2 to 4. Go down. And all of this, these are just an outcome of the choices and the work that we did. As you can see, not just the top line, but most importantly, our EBITDA also grew by in excess of 30%, and a very sharp increase in our EPS over the last 5 years. Go down. So this is how we are spread today. As you can see in the world map, the green colored geographies are where we now are physically present with our manufacturing base. We have around 17 plants in all. India being the giant with 9 plants, and then 4 in Thailand, and going forward. And as you can see, we are serving almost 50 countries from these 70 locations with a global talent pool of around 3,000 employees. I think this is worth mentioning, on the point where I said that 90% of our portfolio comes from food and pharma. So what does that mean exactly? So within this also almost 75% is there with the food segment. Some of the important aspects to look at this sector or this industry is, it's not prone to demand cyclicality as you might see for many other segments. So that is something, which also went into our initial choices, because we wanted to get into a business, we wanted to get into a sector which at least gives us a cash flow resiliency. And that was something which got even seriously tested during the times of COVID. And that's the reason you will see that while we have had some bit of an impact because of the overall inflationary environment that came throughout of the events like COVID and geopolitical situations, but nevertheless, we still had a resiliency and demand, which in that entire period, and that is what makes us our conviction in this particular sector even stronger. You can see some of the pictures of our facilities. As you can imagine, these are very high clean room kind of environment, strict disciplinary codes, strict processes to ensure that there are no dust particles which can come into our product packaging. And that's the reason, and these kind of facilities are not something which can be easily replicated. It requires both investment and experience and know-how as you build these facilities around the world globally. And even here also, it's a evolutionary curve from where we started to where we are today. There is, as I said, all new products that come out of TPAC have a very strong design foundation. Our design teams, which has a mix of people from across the globe, are now working very closely, both with our vendor base, which includes the mold guys, and also the customers, in designing new products which meets to the requirements of functionality, meets to the requirement of the shape, and also sustainability. And one such product, that we feel which recently has come out of our portfolio is for a world's largest herbs and spices player, where we are the first ones to introduce a double barrier oxygen and an IML solution for them. And many such of those products are the first ones in the world to come out of TPAC shelf, and that's what keeps the customers engaged with us. That's what keeps the customers sticking with us for years together, and finally results in what you see on the numbers. Go down, please. I guess the other sector we spoke about is pharma, which was not there when we started off as a new management, but that's also something which we have now built over the years, both partly through what we acquired and building over it. This almost calls for the next order of requirement when it comes to hygiene and clean room, and that's something which we have now today mastered ourselves to be one of the names to reckon with, at least in India, for one of the most recommended packaging players in the pharma segment. And as we speak, new products continue to come out of it. I mean, very recently we inaugurated a new technology within the group called injection blow molding, from which you can see this tiny little nasal spray, which may look small, but it's very, very intricate in terms of how it is produced and how it needs to be designed for a pharma application. So these two segments together account for almost 90% of our business as we speak today. Go next, please. Well, these are names which I don't need. They don't need any introduction. So we are serving the who's and who's in terms of the MNCs, the local giants in the pharma and food space. We are not restricting ourselves to the global majors, but are also very, very actively engaged with some of the emerging players, and who have actually been growing very fast, because for us it is important that we grow with our customers and at the same time also build new relationships. So you can see those names which are local champions on the Thai side, and at the same time some of the emerging food giants in the emerging geographies that we are now building relationship with. Many of these are where the relationship is more than 3 or 4 odd decades, but the new logos always keeps getting added every year. But coming back to the moot point here, our top 10 customers do not account for more than 30%. So ensure that we are well diversified, both from client geography perspective to hedge our risk. Go down, please. I guess we have spoken about how things have been for us. Now it's important for you to get some insight on how we look into the future. So there is a clearly defined strategy of how we intend to go into the future. I guess the first one is definitely built around the fact that we are present in the markets which are growing healthily at a good rate. But our desire and our aspiration and our commitment to ourselves would be to at least grow 1.5x of what the growth of the market is and where we are. So whether it's Thailand, whether it's India, whether it's UAE or Malaysia, first we from the sector, from the niche area that we are present in that particular geography, we are by far the leader, which is something which we will retain as a leadership position even as we go forward. More importantly, as the market grows, we will make sure that we are at least growing faster than the market by an order of 1.5x, which means it will come through us gaining our market share. So that's our first strategy organically. Go forward.
Yeah, I think I just want to add we really expect to grow minimum 1.5x of market growth. We are hopeful we can even do better. We have done better in the past. So that 1.5x is just as a minimum.
Yeah. I think the next pillar for us is India. As many of you would be aware, almost more than 40% of our top line today comes from India. It's one of the fastest growing consumer economies, and now we have a very solid foundation in place with our presence in north, west, and south of that gigantic economy. I guess the foundation was laid in 2018 when we acquired this business from the erstwhile founders. It was 5 plants. We are very happy with what we have done till now in terms of increasing the sales, acquiring presence in south, bringing new technologies, and equally growing, and most importantly, bringing a very solid management team on ground. A team which we has time and again demonstrated their credibility, and now we feel very, very confident with that team in place, with processes in place, manufacturing platforms in there, to be able to embark on the next leg of growth, which can actually be a scalar play for us. So we are very bullish on this geography, and we see great opportunities unfolding for us, both organically and organically in this country. To the extent that we anticipate that potentially this geography on its own could lead to becoming one of the exciting packaging IPOs in the next 3 to 4 years. That's not something that we are saying is a clear laid out plan, but our mindset is to grow this business to a size and scale and creating value for which can be unlocked through a mechanism like a IPO. So yes, so India definitely is one of our strong pillars on this strategy going forward. Go down. I guess M&A has been instrumental in in past for us in terms of driving that growth, and we expect that to continue. We have a very well-oiled M&A engine in place, where we have established some record timelines of closing deal end to end in 3 months. I guess that's something which is very valued in the ecosystem of M&A. We have great network partners who continue to flood us with a lot of opportunities that are there. At the same time, in our journey, we have also met with a lot of like-minded promoters, who we believe at some point of time might also look at finding a good house for their business, because the next decade is all about a lot of these family-owned businesses, looking at the right house, as many of them face succession issues, many of them face issues on not being able to scale beyond a certain point of time. And that's the gold mine for us. That's where TPAC brings its unique strength of being both a familial value-driven company, at the same time also bringing its own set of processes and playbook which allows value creation, something that you will see has happened for all of our M&As in past. So this will continue to be an important driver of growth for us as we move ahead. Go down. I guess this you can see clearly on how we have enhanced and created value for all of our acquisitions, be it in terms of growing our manufacturing platforms, be in terms of increasing the volumes, and not just volumes, but even margins. And most importantly, as I said, bringing new technologies, cross-pollination of customers. So all in all, I think, for us, there is a demonstrated history of creating value in a short period of time for all the acquisitions that we have done. Go down, please. This is also a unique case study. So it's not just about us growing a platform which was already positive, or growing a platform which was already in green. We have also had cases where we have acquired a loss-making business in anticipation of turning it around. It took more time than what we had expected, but now we can say with a lot of pride and humility that today the group even has the recipe to be able to turn around assets. And it all starts with getting the right vision, getting the right leadership on in place, which we did for the first acquisition that we did in the group in Thailand. So I'm talking about Bangna operations, which has been not performing to its core for quite some time. But as you can see now, a business has completely turned around from negative to a very healthy double-digit margin, almost in line with what our current Thailand business margins are in a span of 5 to 6 quarters. And it happened through a series of initiatives taken, whether it is about investments that were made into improving the machinery and the quality of the equipment, or whether it was almost bringing the mindset of zero-based accounting to ensure that there is high degree of cost discipline. And most importantly, also having some serious conversations with the existing customers where we felt that the products and the pricing were not aligned. And again, as is the case for our business, the sales engine was activated to bring more and more customers, and you can see the results happening in a span of 5 to 6 quarters. Go down, please. I think the next pillar of strategy for us is about what we are doing in each one of the geographies. We don't let that stay in isolation. We leverage on the competency, the customers, the relationships, the product design capability of each one of the geographies and marry it with the other. We have done that in past. We have brought new technologies from one group, from one center to another. And that's how we are able to scale up. That's how we are able to grow faster than how the geography, that we have been there as. So value creation through synergy is one of the elements of how we are also driving and creating value in our group. Go down, please. And this is the last one, so till date, all our international expansions have been inorganic, as you would have noticed, whether it was India, Malaysia, UAE. This is the first time now we are going organic into a new geography. Again, a very exciting geography in terms of the size. It's one of the fastest growing Asian geographies. And most importantly, it's a testimony of our customer who called us to set up a shop with them. It's a testimony of how they see us as a credible suppliers, that they asked us to join them as they moved from Malaysia to Philippines to set up their own operations. They asked us to set up a shop next to them and serve them with the packaging products for their requirements. And most importantly, we also feel confident today with now a management team in place, which can drive such organic initiatives, which as you would imagine should bring a higher ROI than paying for an inorganic asset. So things are going well for us in here. We should be commencing our operations in the first quarter of next year. We have an anchor customer to start with, and TPAC as a group is quite excited to now move ahead and build a new foundation into a new geography. Go forward, please. Yeah, so now just quickly to sum it up in terms of what does it mean financially, as you can see, it's a history of growth of almost CAGR of more than 30% at a profitability at an EBITDA level in the last 5 years. What's equally important is that our 2023 is also has been a record year on many fronts. Our 9 months EPS has already surpassed what we did for the full year last in 2022, and we are all set to close this year at an all-time high year for TPAC in TPAC's history. Go down, please. I think it's important for you guys to know and for us to also take a strong control on that. We not only focus on how much we are generating as profits, but equally in terms of how that gets translated into cash flows. So you can see our history where we have a conversion ratio of almost around 75 to 80% of our EBITDA into operating cash flow generation, which has in past funded our good portion of our inorganic ambitions, at the same time is good enough to meet to our organic requirements. Go down, please. I guess now you can see the organic capex, which used to be close to around 30-35% of our EBITDA in past. Now as we have stepped up the pedal and it's close to around 50%. This again is a demonstration of the fact that today, with all the foundations in place, we believe that we are more confident to bring the growth through organic investments, and that's the reason a lot of these intensity increase is happening, and bulk of it is also happening in India and some bit of it in UAE. So this is a very positive sign, and hopefully with these investment we should see the results of that coming through in the next few coming years. Go down, please. I think we have already spoken about the fact that how our 9 months profitability is much ahead of what we have done in the full year. Go down. And I guess this is, as you can see over the last few quarters of how this has panned out for us, it tells you what led to this happening, right? So 2022 was a tough year for all of us with the inflationary environment, geopolitical risk coming in, and we were equally hit, which resulted in our margins getting contracted, volumes getting dried up. But we worked relentlessly in that environment on a multi-fold area, whether it was to add more customers if the existing customer volumes were getting dried up, thereby bringing increasing the wallet share, getting more market share in the respective geographies. Most importantly, a very, very high element of focus on operational excellence. So every penny was relooked at from a bottom of working. How could we save on energy? How could we optimize manpower and its planning through automation coming through? Procurement was looked at it from a global perspective to see if there can be things strategically negotiated, and wherever required, candid, honest conversations with customers for price corrections. All of this led to us being able to retain and regain back our margin structures, and that's how you can see, with the combination of both growth in volume as well as on getting our margins back on track, we could post a very strong 2023 till now. Go down, please. And not just the growth, we also made sure that cash was kept in control, and 2022 in Q1 or so, we had done one acquisition which had led to our balance sheet become slightly heavier. But as you can see now, with every quarter, while the growth was happening, we have also been able to delever our balance sheet, and today we are at a very comfortable 1x of net debt to equity as far as a consolidated balance sheet is concerned. Go down, please. And last but not the least, the last quarter that we posted is another record quarter in the history of TPAC. We surpassing our own record of that we established in Q1 of this year. And while we don't live by quarters, but this is just an indication of how we, at least in our mindset, we are looking at growth year on year for TPAC as a whole, and we expect things to unfold in similar fashion, and hopefully have many more quarters like this in the coming years. Go down, please. And I'll just summarize what I just spoke for you guys, of what you should take back. You're talking to Asia's fastest growing packaging company, a packaging company which we also believe and claim to be most sustainable in terms of our choices on polymers and monomaterial formats that we work with. Very, very focused and specialized. We don't do everything and anything under the sun. We are focused on sectors which bring a very high level of resilience and stickiness from customers, hard to penetrate segments with strong cash flow resiliency. A management team in place, which is most important, that we now have set across our geographies for all our businesses, which continues to get strengthened at all levels. And most importantly, a balance sheet which today is at a very comfortable level, which allows us the room to grow further and spend further organically and inorganically. From an outlook standpoint, we remain optimistic, in years to come. We believe we are in the right geographies with the right set of products. And we also believe that more than organic growth, there will also be a lot of opportunities that we will leverage and capitalize on the M&A front. And hopefully, for the geographies that we have spent now that we are in, there is going to be an accelerated intensity that you will see on the organic front as we invest more into each one of these geographies. So I guess, with this, I like to end our introductory presentation. Thank you so much for your patient listening. We'll be more than happy to have your questions, if any, to answer, or any comments if you may have. Thank you so much.
วิชาเดี๋ยวเซสชันถัดมานะครับเราก็จะเข้าสู่เซสชันของ Q&A นะครับแต่ว่าเวลาเราเนี่ยก็ถือว่าค่อนข้างไทท์นิดนึงเราก็อาจจะมีคำถามได้ไม่เยอะนะครับแต่เดี๋ยวจะมาเริ่มกันที่คำถามแรกก่อนนะครับเป็นคำถามเกี่ยวกับตัวของfree float นะครับว่าบริษัทเนี่ยมีแผนยังไงเกี่ยวกับการบริหาร free float นะครับคุณวิชาครับwhich are the options that you are considering for the free float situation, like how do you plan to increase the free float proportion?
No, I think that's very valid. We do understand that currently we have our free float is close to around 20%. So as we speak, we are exploring options which could bring both capital into the company for funding future growth, at the same time also solve for some of the liquidity issues. And whether it could be in the form of warrants, it could be in the form of also looking at dividend splits, right? So that stock splits, so that we can actually increase the liquidity for our shareholders. So that's something which we are totally mindful of. I think the only point I like to say here is our existing promoters and founders are very much invested into this business. So they are not looking at monetizing it. So we need to basically marry this with some kind of a growth opportunity so that we can bring both capital and liquidity into the company.
I'd just like to add, I think this is a very relevant matter for us to address. Thank you for the question. As we've said in the past few months, this is a very high priority area for us. We are getting a lot of interest for investment into our company. It seems the one limiting factor, no doubt, is liquidity. And so, as Vishal said, it's a high priority for us. We are looking to find a solution to this very soon. We are currently engaged with, if I can call it, a non-deal roadshow, getting out there, speaking with investors, various different types of investors, getting their feedback and ideas on how they think is the best way to unlock this liquidity issue right now. So at the same time, as you know, there are ongoing live activities happening out in the market with regards to our capex needs and spending. Organic projects, inorganic projects are always there. So we are looking for a way to the situation is dynamic. It's a combination of market conditions, our capital capex needs, both organic, inorganic. But what I can say is that this is a high priority area. It's about time that once and for all we unlock this value. Our major shareholder is also keen that management delivers a solution here that will be a win-win for everyone. So we hear your concerns. I hope to provide some comfort by saying that this is a very high priority for myself, for our company, which we intend to resolve soon.
ครับlet me summarize short summarize นะครับทางผู้บริหารก็ขณะนี้ก็ดูหลายๆวิธีครับในการที่จะ unlock value ของตัวบริษัทนะครับแก้ปัญหา free float นะครับในการที่จะเพิ่ม liquidity นะครับก็ในเชิงของการทำงานภายในเนี่ยมันก็จะมีการลงทุนมี capex อะไรที่ต้องดำเนินการต่อครับแล้วก็มองหาtools ที่จะมาเลยเนี่ยแก้ปัญหา free float ครับแล้วก็ในขณะเดียวกันเนี่ยก็มี funding เข้ามาด้วยนะครับตอนนี้ก็เป็น priority สูงสุดของบริษัทครับ
โอเคครับผมแล้วก็one more question before we end our session today. What would be the size of the second M&A in Malaysia? Like he wondered like how large would it be for the Malaysian market?
We haven't disclosed anything about any M&A, and we wouldn't disclose anything about any M&A. So I'm not sure what this question is. We've not disclosed anything, and we wouldn't.
Okay. Then the other question would be, do you have like the numbers of the U rate for the two new greenfield factories in India that you COD like last year?
The question, Vishal, is utilization rate of our new plants in India.
Yeah. So I guess, that's a good part that, in India, the market almost is ahead of our investments. So whatever we have done as investments, we overall in India level, we are utilizing close to around 75 to 80% of our facilities. And that is the reason as we speak. So we have created the infrastructure, Kunachapon, right, which can house more capacity. And that is something that we can add on a modular fashion. So current capacity that we have, we are almost occupying 80% of that. And as we speak, we are also investing in the same infrastructure for more capacity, which hopefully we will continue to utilize in the coming years around 75 to 80%. So we always plan for a capacity as we see our utilization rates going around 80%. Yeah.
Just to be clear, what Vishal is saying, we've built the plant, we have the infrastructure. We don't need to build new plants as we have the infrastructure ready. We just need to add machines. But Vishal, do you want to give a sense how much more machines can we add, or how much more can overall volumes increase? How much more space do we have?
Yeah, I think it will be fair to say that from the existing place that we have in terms of infrastructure, we can fill in with more capacity and machines, which can allow us to at least increase by our volumes by 30 to 40%.
30 to 40% increase in volumes is possible with our existing infrastructure that we have built.
If we optimize it with our machines and capacities.
Yeah, with our existing building infrastructure.
Okay.
We obviously need to add machines. Yeah.
ครับนั่นก็คือเป็นพื้นที่ที่บริษัทมีอยู่แล้วนะครับก็แค่ add machine เข้าไปแล้วก็ผลิตนะครับไม่ได้ต้องสร้างแผนใหม่
ครับแล้วแพลนนี้ที่ทางคุณวิชาพูดเมื่อกี้คือสามารถเพิ่มได้อีกเยอะไหมนะครับ
Michelle, can you elaborate more about the expansion in the plant?
Like how much more volume you can, like in percentage maybe?
30 to 40% more volume is possible
30 to 40% more volume can be derived from India.
from our new buildings.
ครับ
Okay.
ก็50%ขึ้นนะครับที่สามารถ
โอเค
add ขึ้น
ครับ
ได้
ผมได้เลยครับแล้วก็วันนี้น่าเสียดายที่เวลาเราก็หมดแล้วนะครับ ไว้เดี๋ยวโอกาสหน้าเราจะเชิญมาพูดคุยกันอีกครั้งนะครับ ถ้ามีพัฒนาการใหม่ๆ หรือว่ามีสตอรี่ใหม่ๆที่น่าสนใจ เดี๋ยวเราจะเชิญมาอีกรอบหนึ่งแล้วกันนะครับ วันนี้ก็ต้องขอบคุณมากๆเลยนะครับ Thank you so much คุณวิชาญคุณ Kevin for joining our session today and hope to see you next time maybe after your new deal or new investments or announcement. Thank you so much.
Thank you
Thank you.
thank you
Thank you.
thank you thank you so much
Thank you everyone.
ขอบคุณครับ สวัสดีครับ
ครับสวัสดีครับ
แฟนเพจYuantaที่รับชมผ่านทาง YouTube อย่าลืมกดไลค์เพื่อให้กำลังใจพร้อมกับกดปุ่ม Subscribe และกระดิ่งแจ้งเตือนไว้นะคะสำหรับแฟนเพจYuantaที่รับชมผ่านทาง Facebook อย่าลืมกดไลค์และกดติดตามเพื่อที่จะไม่พลาดข่าวสารสำคัญจากทางเราและที่สำคัญอย่าลืมกดปุ่ม See First เพื่อรับการแจ้งเตือนนะคะ